Hello everyone, corporate accounting part 1. In that we are studying the liquidation of companies. So in the session 10 we will discuss a problem on preparation of the liquidators final statement of account. So this one is the problem here. The Moody Limited went into voluntary liquidation on 1st January 2016. The subscribed capital of the company as on that date was as follows. So they have given their capital structure here. So 1 lakh 6% preference shares of rupees 10 each fully paid up. So they are having 1 lakh preference shares of rupees 10 each. So total amount of preference share capital is 10 lakh here. Then 2 lakh ordinary shares of rupees 10 each, rupees 6.25 per share called up and paid up. And they have another category here, 1 lakh 50,000 ordinary shares of rupees 10 each, rupees 7.50 per share called and paid up. So they are having three types of shares here. They are having preference shares and they are having ordinary shares of which nature, out of which 6.25 per share is paid up, and they are having 1,50,000 ordinary shares of rupees 10 each, out of which 7.5 per share is paid up. And they have given some other information here. The assets realized rupees 26 lakh 27,500. So the liquidator has realized all the assets of the company here. So he got 26 lakh 27,500 from realizing the assets here. Then the cost and expenses of liquidation amounted to rupees 1,15,000 here. So liquidation expenses is 1,15,000 and the liabilities to rupees 22 lakh. So he has not given the liabilities in detail. So total liabilities of the company apart from this is 22 lakh. So he has asked us to prepare the liquidator's final statement of account, assuming that he was able to get in all cash from shareholders in respect of such calls as he found it necessary to make here. So what assumption we need to make here? So the so the so the liability of the shareholder is restricted to the face value of the shares here. So the liability of the shareholders is rupees 10 per share here. So out of which one category of shareholders have already paid 6.25 and another category of shareholders have paid 7.50. So if we deduct that amount from the face value of rupees 10, there is liability is still 3.75 and 2.50 here. So if it is necessary, if the liquidator feels it necessary to pay off the liabilities of the company, here he may make the calls here and he may collect the rebating amount here. So look at the solution here. So in the receipt side we have assets realized. So major item of every liquidator's final statement of account is assets realized, that is amounting to rupees 26 lakh 27,500 here. So here we have paid the expenses of liquidation in the credit side amounting to rupees 1,15,000, and we have also paid off the liabilities amounting to rupees 22 lakh. So now just observe here, the assets realized is 26 lakh 27,500, and right now we have made the payment of liquidation expenses amounting to rupees 1,15,000, and we have also paid the liabilities amounting to 22 lakhs. So totally it will be 23 lakh 15,000 we have paid, and we have cash of rupees 26 lakh 27,500, and still we need to pay the preferred shareholders. So we need to find out how much amount is required here. So we need to pay to the shareholders here, preferred shareholders. Leave the equity shareholders. At least we need to pay the preferred shareholders here. So preferred shareholders is amounting to rupees 10 lakh here. 1 lakh 6% preferred shares of rupees 10 each means it is 10 lakh. So we need to pay the 10 lakh amount to the preferred shareholders. If you make the total of credit side here, it will be 33 lakh 15,000 here. So 33 lakh 15,000 is the total payment, plus amount available is how much here? It is only 26 lakh 27,500. We got this much amount by realizing the assets here. So still we require 6 lakh 87,500. So how you are going to collect this amount? You can collect this amount from the shareholders because they have paid only 6.25 and 7.50. So we can collect the amount from them. So first we will collect the amount from here, 2 lakh ordinary shares. Why? Because these 2 lakh ordinary shares have paid only 6.25, whereas this 1 lakh 50,000 ordinary shares have paid 7.50. First we will make the call on this 2 lakh equity shares to make them equal to the other kind of shares here. ಇಲ್ಲಿ ಏನ್ ಮಾಡ್ತೇವ್ರಿ 2 ಲಕ್ಷ ಇಕ್ವಿಟಿ ಶೇರ್ಸ್ 6.25 ಅಷ್ಟೇ ಕೊಟ್ರ ಅವರು. ಸೊ 1,50,000 ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಏನ್ ಮಾಡಿದ್ರೆ 7.50 ಕೊಟ್ರ. ಸೊ ನಾವು ಫಸ್ಟಿಗೆ ಏನ್ ಮಾಡ್ಬೇಕ್ರಿ ಇಲ್ಲಿ 2 ಲ್ಯಾಕ್ ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಇರೋದಲ್ಲ ಇವ್ರ ಕಡೆ ಉಳಿದಂತ ಅಮೌಂಟ್ ಅನ್ನ ಕಲೆಕ್ಟ್ ಮಾಡಬೇಕು. ಸೊ ಅವ್ರದ್ದು ಏನ್ ಮಾಡಬೇಕು 7.50 ಈಕ್ವಲ್ ಆಗೋಗಿ ಮಾಡ್ಕೋಬೇಕು. ಸೊ ಇದು 7.50 ಈಕ್ವಲ್ ಆಗಬೇಕು ಅಂದ್ರೆ ಎಷ್ಟ್ರಿ, ಸ್ಟಿಲ್ ವಿ ನೀಡ್ ಟು ಕಲೆಕ್ಟ್ 1.25 per share from these 2 lakh ordinary shares. So here less calls made on 2 lakh equity shares of rupees 1.25 which have been paid rupees 6.25. 6.25 already pay ಮಾಡ್ಯಾರ. ಸೊ ಅವರು ಇನ್ನೊಂದು category of equity share holders ಈಕ್ವಲ್ ಆಗ್ಬೇಕಂದ್ರೆ ಅವ್ರು ಎಷ್ಟು ಕೊಡ್ಬೇಕ್ರಿ 1.25 ಕೊಡ್ಬೇಕು. ಸೊ ಅದೆಷ್ಟಾಗತ್ತಾ 2,50,000 rupees ಆಗತ್ತಾ. ಸೊ ಇವ್ರ ಕಡೆಯಿಂದ 1.25 ಕಲೆಕ್ಟ್ ಮಾಡಿದ್ರು. ಹೌ ಮಚ್ ಶಾರ್ಟೇಜ್ ವಿ ಆರ್ ಹ್ಯಾವಿಂಗ್ ಹಿಯರ್ 4,37,500. ಸೊ ಇನ್ನು ಎಷ್ಟು ಬರ್ಬೇಕ್ರಿ 4,37,500. ನಾವು ಬೋತ್ ದಿ ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಆರ್ ಈಕ್ವಲ್. ನಾವು ಅವ್ರು 6.25 ಕೊಟ್ಟಿದ್ರು, ಅವ್ರ ಕಡೆಯಿಂದ 1.25 ಕಲೆಕ್ಟ್ ಮಾಡಿದ್ವಿ. ಇವ್ರು ಆಲ್ರೆಡಿ 7.5 ಕೊಟ್ರ. ಸೊ ಬೋತ್ ಆರ್ ಈಕ್ವಲ್ ನಾವು. ಸೊ ದ ರಿಮೈನಿಂಗ್ ಶಾರ್ಟೇಜ್ ಅಮೌಂಟ್ ಕ್ಯಾನ್ ಬಿ ಕಲೆಕ್ಟೆಡ್ ಬೈ them here. So how you are going to calculate that? Calls made per share is equal to shortage amount divided by number of equity shares. That is 4,37,500 divided by 2 lakh plus 1,50,000. So totally 4,37,500 divided by 3,50,000. It will come to the 1.25 each. So what you are going to make? First you are going to make 1.25 rupees call on 2 lakh shares. You will get 2,50,000 and still you are having shortage of 4,37,500. So what you need to do, the liquidator will make a call on all the shares at the rate of 1.25 per share. So he will collect 2,50,000, then he will collect 2,50,000 and he will collect 1,87,500. So we can pay the preferred shareholders here. So equity shareholders will not get any amount in this case here. Yes, thank you.